The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. My pleasure to be here, and we're going to go through all the numbers just in sequence as I do in my show, which is usually 11 o'clock, which will be today as well. 11 o'clock till noon Eastern Time. This is called the Tiger Technicians Hour. So let's run the numbers. Dow futures right now are down $1.25 at 2,077. There was a much steeper decline around about 6:30 this morning, 6:30, 7 o'clock. The futures went all the way down to 2,068.75. Really important here. See, there's a trend line in the daily chart. You've gone from a Chapman Wave peak F at 2134 round number high that was made. I should have put the date in there on the 19th. Let me just type that inside. I don't have to keep looking. 519. Oh, there it is. Okay. So 519, you go from 2134 to today's low of 2068. So I'd call that a pretty sharp decline. What have we got there? 68, 70-point decline. And it's very important. Is that right? 70? I couldn't be right. I mean, 3-4 from 50. A 50 points decline. All right. What's really important about this is that within the... Why should I not be able to subtract? Let me just do that again. I keep looking at the wrong thing. Yeah, that's 70-point decline. They're futures. That's big. So what's really important about this is that at this particular point, what I said to my subscribers on my opening call is that we could expect a bounce today. In the Chapman Wave methodology, let me show you something. It's real simple. You find the lowest, most obvious low bar, and from that, you count each successively higher peak. These are futures. The futures trade in 25-cent increments for the E-mini S&P June future. And you've gone to a peak A right there from the low that was made at 2068.75. You went to 2077. And that was a peak A because then you pull back, made a lower high bar. So that creates a peak. And then you spiked up just to one new peak, and that was... at 2077.25 for B, because the very next bar pulled back. And now you've snuck one bar into a new recovery high above the 2077.25 high, and you went to 2077.50, 25 cents. But that constitutes a leg. So a leg continues until it makes a lower high bar, and that becomes a peak. Just exactly as you're looking at a mountain, you call them peaks. That's what we look at here. And the objective in the Chapman Wave is to get you from the lowest low bar to a buy signal that goes to a buy mode. And once you get to a leg C, you should see a leg D. And we'll see what happens. So we'll put this aside here. Now, one of the reasons why I've been negative and I've had my subscribers in short positions, even though we actually also have long positions, but mostly on the indexes we've got some short positions, is... Let me move this away here so you can see. If you look, I'll run the numbers just as I always do. The Dow has gone from the 19th of May, 18,351, made a high in leg F, and that became a peak F the very next day when you had what I call a two-bar, Chapman Wave two-bar reversal. Very close. You can barely see it. It went from 18,351. The very next day, the high was 18,350. And that is a heads up to say, oh, watch out, we could be pulling back. And you did. We pulled back all the way to yesterday's low bar, which went down to, let me move this away. Now we're getting a possible trough D. If the low of yesterday, 17,760, is not taken out this morning, or at least today, that will make a trough, and then you can get a pretty nice bounce. And the 120-minute chart right here is suggesting we've made a declining wedge formation, and there should be from a leg, maybe a trough F, we should be making some kind of a rally. Can we get to 18,045, the 200 period exponential moving average? No. The very first level is 17,837, the 9 period moving average, and then you get the, let me just double check this, the 14 period exponential moving average, which is at, let me just hit it right there, 17,008, no, 17,000, is that 9? No, that can't be right. No, 17,870s. Okay, so that's what I'd be looking at on the day. So let me move this away now. In fact, let me make this smaller because I want to show you a couple of other things here. Right. So the Dow has made a peak E-top in the weekly chart, and I've circled this. Actually, I should move it just a little bit to the right because this was done a little while ago there. And that says we should be targeting the 17,600 sometime very soon. But most importantly, you're now underneath that black line, which is the 9 period exponential moving average. So a couple of 17,972 on the weekly chart is that resistance. Well, let me go to, and then the monthly chart, we have to wait for the full month, but this is G/C in the Chapman Wave. I won't get involved with that right now, other than to say this is a very important month because if there's a close below 17,600, actually, I'm just going to make it clear. If there's a close below 17,500 at any point in a weekly chart, that's going to be very negative for an implication that says the monthly chart is going to be impacted. And that question Mr. Bull asked in the den, is there any strength in the four horsemen? Those four horsemen are the index that I made up, which is GE. And GE says, well, it's under the 9 period moving average. It is, the technicals are weak. And it's just sold off another one of its big pies. And the pie is getting smaller and smaller. At some point, G will see the benefit of that. But right now, nothing's really happening as a 27.23. I just don't see it. I see it in the sideways range, more likely making lower highs and lower lows. You've got IBM, which had a terrible day yesterday, well, for the last 3-4 days. And it looks very poor. It's failing once again. Triple M, which is one of my four horsemen. Wow, about to test the left side low bar. Oh, it was a leader right up until a couple of months ago. And now if 156.01 is trading at 156, in the 156s right now. If it goes to 155, it could bounce, but it's a very negative sign because it's gone to A, B, C. It's in leg D down in a weekly chart with very poor technicals. And the final one is UTX. UTX is also acting very poorly. Now I can put a down arrow right there in the daily. So we've got peak D in the weekly. You got a second D in the downside in the daily, and a G/A. A would be very positive. Calling it a G for now in the monthly, and the monthly is still okay. But UTX is not showing any real signs of strength in the short term. So let me go through these. Continue SPX.X. Trade what you see. Let's see what we're seeing here. Look, you're failing. You're about to take out this very important trend line support in the weekly chart, having made 2134.72 the all-time high. Let's see. Right. And you've got a peak F on the 20th with also Chapman Wave 2-bar reversal at 2134.72. Very next bar is 2134.28. And that suggests that the left side low bar of the 6th of May at 2067 will become a target, even if there's a bit of a bounce here. And I have to tell you, I think we've got an oversold condition and we should see some kind of a bounce. What's going to be really important today is how do we see the VIX index, which has made a peak C in the daily chart. First time it's even gotten to a C in the daily chart, making a cup formation until it really breaks that 1636 level. That was in May, about the 5th or so, was it? The 6th of May. Not only has it got to get there, but it's got to close above 16 and really close in the 1650s for at least 2 out of 3 sessions. And at that point, you will see this market really start to pull back. At this particular point, it's just recognizing that the Dow is pull back several hundred points. The S&P also pull back sharply. And it's the weekly chart that we're looking at here with this candle that gapped up and is suspended. Will it fill this little gap between the close of Friday, not the high, but the close of Friday and the open on Monday? And that would say that a close below 1467 on the weekly chart would be very negative. That is, we have to wait until Friday. Okay, let's go on. So the parameters, let's go back. So parameters I'm looking at, VIX index in the low 14s, not good, but very good for the market. It gives buying pressure. The VIX any day start to close in the 1565, 1580 area says great, getting close to the 1630s, but you really need the 1630s. And that 1636 level not only is the high in the daily chart on the 6th of May, but it is 1636 is exactly the 200 period exponential moving average resistance that has been the repellent for so long in the weekly chart. Now let's go to the next thing. So we've got the QQQ, 1, 2, 3. QQQ is breaking down regardless of Apple. It's just looking terrible now. And I mentioned that I was looking at the potential for an arch formation here. Remember, the way I look at markets, there are only 3 patterns. There's the straight up or straight down like that over there, if you're looking at the daily chart of the Qs. There is the arch or inverted V-shaped pattern. That's the second pattern. It's part A, part B. And the third one is a cup or a V-shaped formation, also part A, part B, but really it's only one pattern that goes from the left side lip, pulls back, and then comes back to the left side lip to test it. Or in this case, the trough, the low that was made at 106 round number low in the QQQ runs up to 111.06, fails to get to 116 test of the the recovery high, and turns down. So it says that any bounce here is going to be transitory because the trend on the shorter term is to the downside. The weekly, unlike the Dow, the weekly is indicating that it could be a sell signal. I haven't put a down arrow yet like the Dow, but it's real close. Okay, now the futures are moving up. That's exactly what we were looking at. Let me show you this chart again, if I can find the darn thing. Where did it go? There it is. No, there it isn't. Uh-oh. There it is. Yeah, we go. All right, there's your leg C. Leg C is continuing, so that arch formation is invalid. And now what we've got is the potential. It's really not a very good-looking V-shaped pattern, but it's improving. And it says now I can draw some kind of a cup that says that there could be a left side, right side price time match. And the price time match I should have drawn in before actually would go. This is way too close. I have to go a particular candle. That's the candle that I'm going to. And right here, I'm going to put in the right side, and we'll see if it's going to hit. Okay. Let me just move this a little bit. Oh, we've got a break coming up. Forgot all about the breaks. I'll be right back. Basil Chapman sitting in for Larry Pesavento. We'll be right back, and we'll be looking at chart patterns as soon as we return.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Basil Chapman, Tiger Technicians Hour, usually at 11 o'clock. Instead, I'm sitting in for Larry Pesavento. So trade what you see is what we've got. Gold contract up $6 at $11.79. Now, this is what I'm looking at, the continuous contract. We made a trough A, B, C, trough C, and there's a little bit of a bounce, got repelled right at the 1182 level. And what was the high? The actual high was, let me move this over here. This is the 120-minute chart, 1182.30. So here's the 120-minute chart. Let me show you what we were talking about before. Remember the Chapman Wave? What we look for are for successively higher peaks. And there we went. A, B, C. We're in leg D right now on the 120-minute chart. And we've made 30-30. Yep, we've made a double high here at 1182.30. And that means leg D continues. If it was just a fraction lower, it wouldn't be. And we have to wait another 120-minute bar to see if it continues higher or whether it pulls back. So now what I'm looking at is the 200-period exponential moving average on the 120-minute chart is way at 1189. That's 10 points higher. But the way the pattern's working with the MACD and the moving average convergence divergence actually rallying, and the stochastic at 84%, it's saying that if the 1177 to 1176, maybe 1175 area doesn't become support and it pulls back, you've used energy, but you haven't gone all that much higher than in the second phase, walking the 9-period moving average here as it broke out above above 1172, 1173. So what we'd be looking at is if the stochastic starts to pull back under 80%, you will see a failure. If the stochastic holds above 80%, this is the stochastic right here, it's called the slow stochastic. And the numbers we look at are 14, 3, 3, 1, and 20% and 80%. If it's above the 80% level, and you can just hold here above the 9-period moving average and then get another bout of strength. If gold gets into the 1184 area, then all of a sudden, you've got the distance between where we are right now and up at the 200-period moving average. That all of a sudden turns from a propellant away from the line, or let's call it a repellent line, and becomes an attractor. It's like a magnet. And all of a sudden, the magnet, instead of repelling the metal or the price, because in this case, gold, it starts to attract it. And then all of a sudden, you'll see a move towards 1189. And the gold hasn't been at this level on the 120-minute chart since the 1st of June, where it is up at the 1204 level. Now, what's really important is that we've got to go to the dollar. I'm a little bit behind on the dollar. The dollar's about plus 0.6 at 95.38. I've got it trading at 95.52. So I'm a little behind. So the dollar actually pulled back from here. You went to that peak D. Remember how many times you listen to my show, you listen to this show with Larry, you will just be amazed at how many times the 120-minute chart turns that peak D, that fourth highest peak, into a really important top of some consequence. So now what we're looking at is that as this is moving along, we've got a retest, but at a higher level from the low bar of the dollar. The dollar's trying to bounce again, and it's exactly the same principle. The dollar at 95.52, if it starts to rally a little later in the day and it's able to get to 95.71, 95.72 and hold, all of a sudden the 200-period moving average, instead of becoming a repellent, becomes an attractor, a magnet. And at 95.95, that's where the price of the dollar could go. Then you'll see gold pull back. But at this particular point, the dollar is just neutral to slightly negative on this 120-minute chart, and the gold contract is doing the exact opposite, is acting quite well here. It is holding very close to its recent high of 1182.30. It's at 1179.60, and we're going to be watching it closely. Yep, that's what I've got. So that's going to be very important. Now I'd like to do a couple of things here. I'd like to look at, I just wanted to show high-grade copper, because high-grade copper is really an international, maybe it's not quite what it was when China was just buying and buying and buying copper, but it's still an international sign of economic strength in terms of the building industry, in terms of opening new plants, etc. So I have to consider that it's important enough for me to say that high-grade copper at 2.72, if at any time in the next week it starts to break under 2.60, close under 2.60, then all of a sudden you've got something that says, oh man, that weekly chart is not very strong, but that monthly chart, the weight of the downward move, let me just move this away and you'll see what I'm talking about. This is a continuous contract, made a peak E in the copper contract way back in 2011, up in the 4.6 area, and then all of a sudden pulls back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back. Basil Chapman sitting for Larry Pesavento. Trade What You See, and we've got the Dow open. It's up 34. The S&P's up 3.11. The comp index is down 2 at 50.18. We've got gold up 5 at 11.78. You've got silver up 0.05 at 16.01. Platinum up 7, and you've got copper up 2.90, 2.72. More importantly, you've got crude oil up at 59.80, up $1.66. Most importantly, you've got the bonds down 25. Wow. Wait a minute. Yeah, the TLT is down 51 at 116.90. And you've got the dollar up 0.08. And the euro is down a little bit. This is going to be a very interesting session. Look what happened. Remember what I was talking about? This is why we've got these live shows. This is why we've got Trade What You See. Look, there's the low bar. And I pointed out that it went to peak A, peak B, peak C. I drew in this pink dash Chapman Wave inside wedge, which said that by 11 o'clock, you should be hitting 2082.00. Well, we just spiked. Boom, like that, 2082.75. There's the goal. What do you want? You want to get to peak D in the Chapman Wave methodology, and we've just done that. Now what do you do? Well, the next thing that you do is you say, well, that's a very strong resistance line. Look, as we're looking at this live, isn't this amazing? You can see the power of this pink line. And we drew it in way before, and it went right through. It looked fantastic when it was up there. And now look, it's struggling. I think it's going to break that line. and then it's going to pull back and have a little digestion for maybe a couple of minutes. And then we're going to see why. Because the level of support would be down here on this low bar right there, 2080.50. And so far it's holding that 2080.50. Look, it's even trying to get back to the highs. This is very nice action, but it's the very opening salvo. And what's happened is you've gone from down 8 or 9 points in the S&P to now up 2.75. That kind of energy, it kind of takes out of you a little bit of, it takes some effort. So just think of it as a human being. These are human beings that are trading these contracts. And right now, there's a little bit of exuberance, a little short covering, and you should see some stalling. So maybe if we go to the 5-minute chart, just for fun, we go to the 5-minute chart. 5-minute chart. Can I find one? Right here, Windows. 5-minute chart. Find me a 5-minute chart right there. 5-minute chart. Boom. Boom. Right there. Boom. Got it. Now, this has got all my techniques on it, but you don't need it. Look, let me go back here. This was the naked chart. I didn't even need the candlesticks because I'm only looking at higher highs and higher lows, but I have the candlesticks because it opens it out, and there's so much information you can learn. That when Steve Nissen produced these American, the version for Americans of candlestick charting, that was just a wonderful, wonderful concept. Here it was picked up immediately, and the candles just give you a lot of information. Let me move this, a naked chart, remember? I put these in after the fact, and then when we were here, it was before the fact of going higher. So I just want you to show you that you don't need all this stuff. Let me show you the stuff I'm talking about right here. But it helps. It helps for many reasons. Why? Look, I've got the 200-period moving average right there in the 5-minute chart. I've got peak A. Let me do the same thing here. Peak A, I'll just type that in. You can see live. And don't forget, in my show at 11 o'clock, I do this stuff. You call in, and I do these charts live for you. And that's going to be right there. D pulls back, and it goes to A, B. Oops, am I making a mistake? Was that an A on the 5-minute chart? 207675, 2076. Yep, that is the A. There's the B. There's the C. And now in the 5-minute chart, you just go to peak D. Or at least a leg D, which will be a peak D in the next couple of minutes. And so I always put a plus sign right there to show that at a peak D, the fourth highest peak, other things can happen. That's really important. But it is also important to identify these peaks. Put a down arrow right there, put an up arrow right there, and I'll take a moment here to explain to you what's going on. This is the slow stochastic. When the slow stochastic gives a very quick peak A, then a B and a C. Usually what happens is the stochastic then pulls back, and the MACD, the moving average convergence divergence, takes over. And this is the torque. This is the momentum. This is the supercharger. And it takes you to the D. And after the D, you've got to see what happens to the stochastic. Well, the stochastic is struggling to get over the green line, which is the 80% line. Look at the huge volume on this particular candle right here. This is the candle after the little high was made in the 5-minute chart. So I believe that this 200 period, let me open this up so you can see it in much greater detail, because I'm sure those of you who are traders love to learn new techniques. You see that 200 period moving average? You see how it deflected lower there? It couldn't break it, and then it ran all the way up and it couldn't get to it, and finally it got to it. That 200 period moving average is your line in the sand. And what happens with a line in the sand, well, it depends if we're talking politics or not. But in the real world, a line in the sand says if you cross over it, you're in new territory. But if you back away from it, it means you couldn't hold that line in the sand. And that line in the sand becomes even more important. What's the line in the sand? Let's make this even bigger. There it is, the line in the sand, right there. And what I'm looking at here, why are these lines here? I think I drew them in before. It doesn't matter. Okay, so what we're looking at here is you've got a peak D. From a peak D, other things can happen. If the stochastic is still weak, the price can hold up, but you really want to see what is the fast-moving average, the green line of the MACD doing. This is a 5-minute chart in the E-mini. And what it's doing is it's saying, I'm holding up, but I can't hold up if the stochastic keeps pulling back and the price breaks under this purple line right there, the 9-period moving average. Not only that, I'm struggling with the 200-period moving average. Oh, can I hold on? And that's what we will see right now, because this is the fight between the leftover residual strength, and that's that fast-moving average. It's the 9-period differential in reality. And here's the decline. And there's the decline. There's the repellent. But the day is young. And I'm looking at a 5-minute bar. I can't make a decision on this 5-minute bar unless there's a stop in place. I can't make a decision until the entire bar is completed. Why? We have seen so many. We just saw it a few moments ago. You were looking great over there and you're looking terrible over there. Then all of a sudden on the next bar, you're looking great over there, and now we're making lower lows. But that's stochastic at 66%. That is telling you a tremendous amount of internal strength, and the shorter term internal strength, and the fast moving average of the MACD is saying longer term, I'm still holding up, but it's getting harder and harder. That's the reason why I haven't collapsed, because I'm trying to hold you up like a puppet with the strings. All right, let's get to some other things here. I want to move away from this. We'll come back to this in a moment. Let me just do this, get out of there, move it away, and I want to show you a couple of other things. So high-grade copper is trying to bounce, but it really looks like it's made that pattern that I call the arch formation, or an uppercase A going straight up and straight down, or we sometimes call it the Eiffel Tower, where it goes straight up and straight down. Got to watch this real closely for copper, because if copper starts to break down in the monthly chart, starts to trade anytime in June, doesn't even have to close there, but anytime if it closes underneath that bar right there of January at 2.4060, this is the continuous contract, that'll be very poor action. So this is a very important moment. Now, let's do a couple of other things. I wanted to look at, just have to check here to see if any callers, no callers, okay? Just want to check here on the right to see if there are any emails. No emails. All right, very good. So that means I can continue here. And what I wanted to look at was the TLT. You see the TLT has just made a lower low? This is a continuation of the weekly. I'd drawn this in as a Chapman Wave parallel. This is what Larry looks at when A to B equals C to D, but I have something a little bit different. I call it the Chapman Wave parallel extension. And there it is, from there to there. That measurement was very important. That the 118 level on the TLT weekly chart held. We've broken below it twice, last week and again this week. It's not a good sign, and it says that the 114.72 level of the 200-period exponential moving average is going to become very important support. In the monthly chart, we've got a leg D that went to a peak D, and I think for the first time I'm going to have no choice, even though it's still not even the middle of the month yet, but I have to put this down as a down arrow because of the stochastic so poor at 59% and trading under the 9-period moving average. So I have a sell mode in the TLT for the first time. What does that do with the Japanization of our bond yields that I always talk about? I don't know. All I know is that there's market weakness. And the market weakness is telling me that there's probably a mini recession that's been going on for about 2-3 months. That's what I've been talking about for a while. And that mini recession is being reflected. And very often when yields go up, you get that. And what would you expect if yields go up? That the HGX, I'm going to show you something fascinating. The Philadelphia housing sector index is acting poorly, and there it is, daily, monthly, weekly is peak F, monthly is peak G/C, still okay. Let me show you something very interesting here. The bonds on the weekly, the yield, the 20-year T-bond yield. I'm going to make this, if you don't mind, I've got to just do this for the moment. Okay, all right. The weekly chart, the white is the 20-year T-bond yield, and this is a level. You see that horizontal line I was showing to folks yesterday in my show, that we've been here many times before, so it's no big deal. We've been way higher. We've been at not 3.16%, but 3.974%. So this is just an important moment in the history of the bond chart, and an important moment in the history of the yield, because it's broken a trend line and it's gone to leg D. Every other time it's gone to a D, it's made a peak D or just gone to a nominal E, the fifth higher peak, just a little later on. Is this going to repeat? Well, I suspect if the Dow cracks 17,500 support, you will see bond yields start to come down again as the Fed is determining that things are not that kosher. We need to be doing something. And it's going to be very interesting. You've got a leg D in the 10-year T-note yield. This is only Tuesday. I mean, the week has barely begun. And a leg C in the 5-year. They usually work parallel, but the 5-year can sometimes disagree a little bit. What's really important is that we've got a steepening of the yield curve. Now, in other periods, we've not had a very big, think of October of 2014. So October, let's get to October right here. Look, yields in October, in fact, were pulling back and they had a little bit of a bounce. So you can't, there's an independence that's going on right now in the bond market to do with the stock market. And because of it, what I'm looking at here is that I have to continually think, yes, there's a real good chance that the Japanization of our bond yields, which I've been speaking about for 12 years or more, has continued. It's still the yields are very, very low, the rates that is. And we will see something else happen if the yields go to 4% over the summer. That'll be something completely different. And what that'll do is it'll help the Fed because they haven't yet officially raised the rates. So there's going to be a key moment. And I also want you to just jump, while we're talking about the yields, I want you to jump to the XLF. The XLF is down 5 cents at 24.59. It was acting quite well. And it was acting well because the theory has always been that when yields start to rally, it helps the financials, it helps the banks. Well, this is saying something very different. So I'm looking at it and I'm saying, hey, the monthly chart says we're merely in a rectangle formation. Rectangles can go on for a very long time, but the pattern I have to be a little afraid of, when I say afraid, I mean afraid in the sense that instead of rallying above 25.14 in the XLF, the S&P Select Financial Spider Fund, the financials start to pull back and you get 24.32 support going, and then all of a sudden you get 24s, and then you're in the 23s, and then suddenly you get the 23.78 level failing, and it creates this arch formation which says the monthly chart, I have to get rid of this for the moment because it's confusing. Really, what the pattern that we're looking at here is more like a rectangle. And rectangle formations can last a lot longer than your patience, and they can go from the top where you think it's going to break out and turn around and then go to the bottom where you think it's going to break down and then turn around, and just like a yo-yo, just bounces between those borders. And that's what I think might be happening here, because I do have a sell signal. My subscribers know we're short, we have long positions, tightened up the stops on the longs, but mostly we are looking at shorts and wanting to add shorts. I'm not sure if that's worked out because during Larry's show I haven't been able to update anything. So I'm just talking about what we have on the table here. So the XLF is going to be very important. Let's look at Goldman Sachs. Yesterday was a very important session. There was a chance I was going to short Goldman Sachs. We had been long. We got out with a little bit of a profit. And because it was a peak F, I was going to short Goldman Sachs. Instead, we had another strategy with another stock that had made a peak F, a possible leg F, which could be a peak F. And we'll talk about that when we get back. Basil Chapman sitting for Larry Pesavento. And yes, it's the traders. It is the Trade What You See. And I'll be right back straight after these messages.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Folks, we're back. Isn't this amazing? Look at this. You remember the low bar? I said identify the low bar, count the peaks up, peak A, peak B, peak C, went to the peak D in a shorter time frame, then pulled back. Remember the resistance from that pink dashed Chapman Wave inside wedge target line? Look what happened. S&P's down 350 at 2,074. It went all the way from 2,082.75. Peak D in the 10-minute chart. Wait a minute. What happened to the 5-minute chart? Well, the 5-minute chart in that time frame made 2 peak Ds. It went to a peak D right there. Oops, let me move that over because I've just opened up the chart. Pulled back, went to another peak D right there. And that's the sharpest one. You remember the repellent line from the 200-period moving average, the 9-period exponential moving average? It pulled underneath it, and now it's trying to find some kind of support. So I hope that gave you a little insight into the technique that I use. It's really a very simple technique. It gets way more complex as you move up and you break a D and you go a little higher. What happens? So I wouldn't say complicated, but there are more decisions to be made. And of course, we have techniques how to follow it. Look how the stochastic and MACD are fading right there at that peak F. So this is a very important moment. Let's look at Wells Fargo. Yep, Wells Fargo is at 5609 peak D. pulling back, leg F, possible peak F in the weekly, possible leg F in the monthly. This is serious stuff. Look at JP Morgan right there. JP Morgan has made a spike. That's another F. It's a rogue wave F in the Chapman Wave. Whoa, be careful there. We don't know. I'm going to put this as a little inverted hat, which is a carrot, and that says be careful. And we've got leg E in the weekly chart. So I'm a little cautious here because even the financials, which should be one of the better sectors under these circumstances, not doing very well. So in the meantime, back at the ranch, let's see, we've got, it's coming up to 10 o'clock. Don't forget, you got Tom O'Brien. Tom O'Brien's going to give you the next hour, looking at the trading situation, looking at what's working, what's not working. I'll be back at 11 o'clock for my Tiger Technicians Hour. Don't forget my opening call. Check out, you might want to get a 2-week free subscription. Check it out. A lot of things going on there, a lot of nice positions. So we're about to wrap up. As we're about to wrap up, since this is Larry's show and he often talks about the VIX index, let me talk about the VIX index. The VIX index is rallying here. It's at 15.50. This is very important. For me, it says that there could be a leg D, and that means that within a day or two, we could, in fact, get a nice pop.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.